Good morning. Welcome to Bazaar Morning Call. We're live from the CNBC TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia and joining me today are Rima and Nigel. Well, guys, it's Friday.
Friday!
And it's Friday. Both of you are in pink, so that's always good, in the pink of health. But it's a long week, right? It's been a really long week. And Nigel, all ready for Friday?
A really long week. I mean, I was wondering
And we
when
thought last week was long, right?
Yeah.
This felt equally tiring and exhausting, man.
Absolutely. I mean, last week we were looking forward to the weekend. I think this weekend is going to be much better. I mean, and it's the end of earnings season, almost the end.
It is
so.
almost the end of earnings season. Budget is over, earnings season is over, so work kind of slows down. But for today, we've had a sort of a weak handover from the US. So in that context, it's going to be perhaps a gap down opening. The Dow was under pressure, about 250 points gone yesterday. Nasdaq has had the roughest time this week as well, and earnings are not looking good across the US, whether it's the ride-hailing major Lyft or even Expedia. Those stocks were under pressure after very disappointing earnings that came through. For our own markets, though, the interesting bit is that the FI data is very encouraging. In the last many days, FI selling has reduced drastically. There was barely 150 crores of selling yesterday compared to an average of around 2,000 crores last week. So in that context, it's very good. And of course, our own markets, the Nifty has gained a bit of ground. This month itself, in 10 days, the Nifty is up about 1.3% and now is approaching the 100-day moving average of 17,940. Let's see, that could be a little bit of a resistance for the market, given that we have weak global cues this morning. But in general, the market has been sort of climbing higher. So will the market continue to see buy on dips? That's the big question. A couple of things in focus. Of course, the Adani Group stocks will be in focus as the MSCI will be reducing weightage in 4 Adani Group companies effective from the 28th of Feb. Enterprises, Total Gas Transmission and ACC. So those stocks will continue to be on our radar. And Zomato, interestingly, there are so many memes doing the rounds on Zomato's excessive use of the phrase adjusted. But it's a net loss that they continue to post, higher than what they saw last quarter. As well as, of course, the food delivery business has improved for sure. So the EBITDA in the food delivery business is now 20 crores plus versus just about 2 crores. And the gross order value has picked up. So a couple of their businesses are doing well. It's really interesting, all the memes, fun to read.
Yeah.
Adjusted EBITDA. But let's see how the stock does today. It has been on a bit of an up move. Let's see how the street reacts.
One more thing about Zomato, while they're focusing so much on profitability, the top line, the revenues are actually down 1% on a quarter-on-quarter basis. So, we shouldn't forget that, this is a company which is known for its growth, and their revenues are down 1% on account of a decline in order volume.
Well, point taken on that. In terms of trade setup, Wednesday was a good day because you had central bankers, they didn't give any shocker. Yesterday was weekly expiry as well, and it played out pretty okay because the Nifty ended in the green with a gain of around 20 points. At one point of time, we were down close to around 100 points. The last 2 sessions are good. The big question is today is Friday, and can the bulls go into the weekend on a high? If that has to happen, the Nifty Bank has been quiet in the last 2 sessions. It's not really moved much. While the Nifty is up close to 100%, 170, 180 points odd. So the Nifty Bank needs to find its form and needs to perform if, in fact, we need to battle. We've got a battle on hand because the SGX Nifty is suggesting that we're likely to start off on the back foot with a cut of close to around 100 points odd. The FI is selling, well, that's come down and that's heartening. This week itself, they sold less than 5,000 crores. The last week, we had 1 day of positive inflows. Yet last week, on the whole, they sold close to around 4,000 crores odd. So good to see that they're selling less. In terms of the F&O action, well, yesterday, the Nifty ended mildly higher and the open interest was down by close to around 2%. So some shorts, they're covering out their position. Maybe they're not getting follow through on the downside. Well, on the FI positioning, they continue to remain net short. Short positioning is at around 81%. So if you get any semblance of some good news, that's what could lead us closer to around that 18,000, 18,100 odd mark. Options data crucial. The bears, they're looking to defend the 18,050 odd mark because yesterday there was a lot of writing at the 18,000 call. On the downside, though, there is some writing that was seen at around the 17,800 put. Close to around 63 rupees was, the premium out there. So what are the levels you're looking at? We bounced yesterday from around that 17,770 odd. So the support level becomes important. That's a crucial level. We like to start off closer to that level. So very, very important. The 20 as well as the 100 DMA, there'll be a bit of a resistance on the upside. Well, yesterday we got past the 20 DMA. You like to end closer to around the 20 DMA and make a dash towards the 100 DMA. The Nifty Bank, I said, has to play a role today. The IT index, remember, could start off on the back foot because the Nasdaq was low. And we've seen some bit of a correlation play out there. So for the Nifty Bank, the 41,200 becomes very important because the 41,500 put has been seeing fair bit of writing. On the upside, though, the 20 and the 100 DMA, they've been elusive, and they are at around 41,700. So the Nifty Bank level should come up for you on the screen. We start off on the back foot. Let's see whether or not we can defend the 17,750 odd mark and see a bit of a bounce from the day's low. Rima, what else?
Well, I'm tracking the data coming out of China, right? That was released just a couple of minutes ago. China's CPI inflation has picked up to 2.1%, which compares with 1.8% in the month of December. So this whole reopening has fueled some inflation in China, but the producer price index continues to decline and it slipped minus 0.8%. But broadly, the economists are saying that this is largely in line with street expectations. The kind of upside that we've seen in inflation and the upside surprise that we've seen in inflation across the region is not yet visible in China, which gives the central bank in China some room to be accommodative when it comes to their monetary policy. What will we watch out here in India? You've got the IIP data that's going to be out later today, and earnings from M&M as well as ABB and a whole host of mid-cap companies. But before we get started on Bazaar, let's tell our viewers what we've lined up in the first half an hour of the show. We'll get you updates from the markets across the globe. Steve Bryce of Standard Chart, Wealth Management and Cameroon Brand of EPFR Global will join in to discuss the global trade setup. Later on, our research team will bring you CNBC TV 18's list of top 10 stocks for the day. And around 8:30 a.m., we'll do a fundamental stock analysis with Gurmeet Chadha of Complete Circle.
Okay, so let's also get you some voices now on the equity side. First up, we have Ridhim Desai of Morgan Stanley giving us his view on Friday, saying that India's relative returns remains under pressure due to the recovery in emerging markets, but they expect absolute returns to improve versus 2022. Morgan Stanley's portfolio strategy includes a barbell sector positions with a cyclical bias, a preference for the broad market, and stock picking over large caps and macro investing.
Some money market views then. Bhaskar Panda of HDFC Bank says the action-packed week, which saw rate hikes from various central banks, including India, is almost over. Thankfully, the volatility was not as much as most of the action came within script. Oil rally too has tapered down. Bhaskar Panda says the USD INR seems to be in a consolidation phase around 82.5 against the dollar, waiting for a breakout. Today, he expects could be another day of consolidation where the USD INR could trade in a range of 82.45 to 82.65 against the dollar.
All right, and on the bonds, Bhaskar Panda says that the RBI has raised interest rates. That was highly expected by 25 basis points. And the guidance is mildly hawkish. Traders seem to be relaxed, which is reflected in the range-bound movement in yields. He expects the same trend to continue and the 10-year benchmark yield to trade within a range of 7.3 to 7.35%.
Well, we have a lot of stock-specific action for you, to track for you, and we'll get to that in just a bit in our special Top 10 segment. We have Zomato, HPCL, Oro Pharma, Lupin, Indian Overseas Bank, and MTAR Technologies. They are stocks on the back of positive news flow. On the flip side, you have the Adani Group, United Breweries, LIC, and Voltas could open up in the red, reacting to negative news flow.
Okay,